Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, hope you're having a happy new year. Going to go over the normal Canadian names, going to do a different video afterwards with some of the lesser known names in the Canadian sector, but here we're going to do CGC, MT, APH, ACB, OGI, and SPRWF because I can't get a chart for SL. So noticing some things as I was preparing for this video, a couple different changes in patterns and correlations, and also something that just clicked in my head in terms of comparing the Canadian sector to the US sector. And I know a lot of people are writing off the US sector, which is completely fine. If you're talking about investing, I can absolutely agree with you in many ways, but it is trading opportunity there. I'm going to be doing the US sector video here in just a bit. We've been breaking out, but I'm going to be comparing a chart here with a US sector name, and there's going to be a lot of information to gather there. So we'll do that here at the end, but we'll go through the rundown right now. And starting with CGC, what we are seeing, I keep saying the middle Bollinger Band is a key resistance level because as long as that level is resistance, we are trading in the bearish Bollinger Band channel between the lower Bollinger Band and the middle Bollinger Band. And until that becomes support, we're just going to continue setting lower highs. So we had our high here at 1117. We now have what appears to be a lower high at 963. And we're looking down at support. I'm looking at 895, 872, and 851. And there's one thing that really distinguishes a lot of these names technically on the charts, and it's names that still have support intact from November 22nd and 23rd, and names that have already lost the support. So I would just split those into two categories right off the bat when looking at these charts, and we'll go through and watch to see who has already lost the support. But we can see CGC is still holding it, but we are also very clearly and undeniably in a downtrend of lower highs and lower lows since December 1st. So all of December was a downtrend of lower highs and lower lows. So we're watching this support of 851 and resistance of 963. It's certainly a tight channel, and with a lack of volume and a lack of volatility, it's not really ideal for day trading. I would not suggest day trading Canada names unless you see volume spikes, because as of right now, we don't have that volatility. Now that being said, there might be some opportunity this coming week. We know OGI has some bad news coming out. So if we see an oversold reaction, an emotional reaction with the psychology shown on our charts with the RSI hitting oversold conditions, that's going to be a potential trigger for a short-term bounce, depending on how significant that dump is. And there could be a nice day trade to be had there. But overall, the sector is lacking volume and lacking day trading opportunity. CGC on the weekly time frame, and that's not the weekly time frame, bear with me just a moment. It's still normal healthy consolidation, and you can see I keep saying it in these videos. You compare it to where we came from, and it could be a bull flag pattern here. Normal healthy consolidation on decreasing volume after such a big move to the upside. Bulls are absolutely still in control of the overall trend, and we are nowhere near changing that. So long-term bulls, investors, they have nothing to worry about unless we were to pull back. I keep saying, in my opinion, 554, that would be the level where the bulls would start to sweat. MT, we know it's trading correlated to CGC with the deal potentially close to executing. And we see most of that priced in my opinion. There's a little bit of doubt just in case, you know, that the deal weren't to go through. But if it does go through, I don't think there's going to be any significant changes in the price action going on here. But we can see that because of that reaction to the news, we had a higher high for MT that we didn't see in a lot of other names. But we still, starting in December, lower highs and lower lows, a clear downtrend. So the new resistance here, we rejected from the middle Bollinger Band resistance level. Currently at 660, we topped out at 662. So that's now another lower high. I'm looking at support of 608, 6 psychological, 587, and then on down to 570. We are well above the low from November 22nd and 23rd. Nowhere near breaking those levels. We would have to lose another 25% or so to be down at those levels. So that's not a concern. The bulls are still looking good on the daily time frame here. And we did have a pretty bullish Friday, but again, it's on very, very low volume, so not much information there without volume to back it up. I use volume almost like a not sure how to word it here, but a prove it indicator. So if I see a big move, I need to see the volume behind it to back it up. Otherwise, I'm not really going to believe the bulls unless the volume shows the strength behind that move. So it's a nice solid green candlestick, but I look at the volume and say, that's not really telling me much. 200,000 shares traded, no big deal. So we have the range to be watching here of 570 and 636. And if we see this lower high daily chart pattern break, it is going to favor the bulls, and we will be looking for some potential, I will personally be looking for some potential long-term entries. I am scouting for long-term Canadian entries in 2017. I'm going to be very, very patient, and I'm going to give up risk, or excuse me, I'm going to give up reward to give up a lot of risk. And that's me saying I'm not going to try and time the bottom or anything. I'm going to wait for the trend to change and to start favoring the bulls with higher lows and higher highs before I make my long position entries. So looking at the weekly here for MT, same thing, normal healthy consolidation after a huge bull move and a dip down last week to 570. Bulls certainly bought that dip, and they are controlling by holding these exponential moving average supports. Volume is continuing to decrease, and we have to factor in the holidays as a reason for the past 2 weeks seeing some low volume. But keep an eye out on MT for any kind of volume spikes, although if this deal does go through, not really going to give us much information. So we'll be looking at CGC for any spikes in volume. As you can see, it's very incrementally decreasing still, and then with last week being a shortened trading week, very low volume there. APH, so this is what I'm starting to get interested in, and a very clear change in correlation where the higher the volatility, and this is coming from experience trading the US regular stock market, the S&P 500 and Apple and Facebook and all the big names, when volatility in the market picks up, the correlation between all of these stocks really strengthens, and they almost move tick for tick with the overall S&P 500. So that's what we've been seeing here, with CGC being the lead of the sector. When there's high volatility, the correlations between all these names are a lot stronger. And now that we're seeing volume taper off and volatility taper off, some of these names are starting to do their own thing. And APH was a very clear lead bull this week. Certainly more so than CGC. You just have to compare the charts. So look at the past week of trading. We had 4 solid green days and then a red bearish reversal candlestick on Friday. But you look at CGC, nowhere near as bullish as APH. So a very clear distinction, and this is the first time that we're seeing that clear of a break of the correlation between all these names. It is still a lower high. We're not changing this trend. We're looking up at 556 resistance, and we now have a high at 519. Again, this is a bearish reversal candlestick, profit taking at the end of the week, and a red day on Tuesday. We will be looking to pull back, and the bulls will try and form a higher low of support. But definitely worth watching, as APH definitely piqued my interest this week, and I'm going to be watching this name very closely to see if it still shows us signs of strength on its own merit here. So we're on the verge of a bullish MACD cross, and I watch these exponential moving averages. This is the 4 period and the 8 period for crosses that give some indication on trend changes. And we did see a bull cross here at the end of last week, and you look at CGC and it has not had a bull cross yet. And we have been seeing a lot of back and forth on these crosses, almost crosses, and that's really the choppy sideways action, not giving us any clear indications. But in the past, there have been some clear indications, most notably the bearish cross here at the end of November, which we haven't really seen much bullish action since that occurred. And keep in mind, CGC, we haven't seen 2 solid green days in a row since back at the end of November. So all of December, we didn't get 2 green days in a row. And you look at APH on the daily, and it got plenty of solid green days in a row here to end December. So again, a very clear, notable difference. Weekly chart for APH, we have our double bottom of support, 405 and 406. If I were in a trade, I would have that as a clear stop loss level. Just below that mark, probably around 398 or so to give $4 psychological support a chance to hold. But look at the back and forth here. Green, red, green, red, green, red, green weeks. So a lot of choppy action. And we can also be scouting an entry. This is what I would call a bottom fishing play, where if we head down, let's say the price gets to 415, looking to make a bullish entry, and the same thing, putting your stop loss just below this double bottom. So if that support breaks, you get stopped out of that trade. But if it holds, you get a really nice entry and some nice gains to the upside. So it's really small risk in terms of capital that you would lose if you buy in close to that support. But we're obviously not there yet. We're still about 20% above that low. ACB, this is where I got really interested just now as I was looking over these charts about to hit record. And it's the correlation to MJNA. And I know there's some strange disgust going on between Canadian traders and investors with the US market, and that's fine. You can choose your favorites and stick with them, but to completely put your blinders on and not look at what's going on would be a big mistake in my opinion. I'm looking to find some ways to start tracking dollar volume across all these companies and start tracking it across the sectors to see if there is an inverse correlation with money coming into Canada and coming out of the US and vice versa. But right now, let's just look at this chart. So we have a clear pullback. We have the high of the euphoria being hit, lower highs, lower lows, and now we have a bounce attempt, another lower high, a higher low, and we're trading straight across. Now, why do I care about that? Number one, the tighter the range gets and the lower the volume gets, we know the closer we are to a clear break, which will be signaled by a spike in volume. So that alone is interesting enough to be watching this name for that break, for trading opportunity. But look at this chart, and one last look here, and let's compare it to MJNA after the vote. So here's the vote, just before the vote, and then you say, okay, euphoria is over, pull back, lower highs, lower lows. Now here's our higher low, and then we trade sideways. So let's just compare and go back and forth here. So where I would put ourselves here on ACB on the MJNA chart would be right here, back in early December. And just compare these names and how similar these charts look. Higher low, or low, and then a higher low. MJNA, low, higher low, flat trading, and then a clear bull breakout. So this has me way more interested than ACB now. It is the same pattern. Euphoria, profit taking, higher low, flat trading, and we're going to look for a potential breakout on ACB, and we'll see if we get that same chart as MJNA. Now, we stayed tight for weeks, so if we were to stay as tight as we did on MJNA in ACB, that would be another week or two before we get our signals. But the very clear signal on MJNA, we hit 12.5, 1, 2, 12.4, 12.4, 12.5, and then the day that we broke 12.5, that's your clear signal. Initial breakout, higher low established, big bull volume, full-on breakout, and we're still going here. That's a really strong close on Friday. MJNA bulls are in full control. The point being, this setup looks very, very similar. It's still a little early. The Bollinger Bands are tightening. If this were going to play out the same way, we would consolidate sideways for another week. We would see a bullish break of the highs here, which is 230. We got multiple highs at 230. That being said, we could see that clear break come early next week because we did close right on 230. If that were the case, 242 is the next resistance. But either way, if we see sideways trading and the Bollinger Bands tighten, I'm going to be making a bullish entry as soon as we get a break of the high of that tightening range. And I'm going to look for the same action to happen that we saw on MJNA. And it would be really awesome to see that same move play out, number one, because we'd be making some sweet profit, and number two, because it would be a great example of how looking at different clues across different sectors and psychological patterns, the psychology is the same here. Euphoria heading into the vote, lots of profit taking, lack of catalysts, things settle out, we reach an equilibrium, and then the bulls show back up. So I am now very interested in ACB. I'm going to be watching ACB and APH for bullish entries, and APH because of that break in the correlation that I just showed you. ACB on the weekly, again, not a ton of information. Inside candlestick showing that tightening range, but without a ton of history here, daily charts where we want to be looking. So I'm interested in ACB. Let's wrap it up here. OGI, bearish news coming out. Looking like we're going to see another high here. We had a double top at $3 psychological resistance. So if we see a bearish reaction on Tuesday, I'm looking down at 269, 253, and 238. And if we break 238, it's going to add OGI to the name or to the group of stocks that have broken their lows of November 22nd and 23rd. And again, the ones that have already done that, ACB has already broken that support. And we're looking at SPRWF, which we'll look at in a moment. It too has broken the support of that time frame. So OGI, if we see a quick dump and oversold conditions, we'll be looking for a day trade bullish entry, and we'll look at those supports that I just pointed out as potential targets for the bulls to show up at, depending on what our shorter term RSI levels are under 30. Weekly time frame still very bullish. And the middle Bollinger Band support is going to come into play here. 253 is one of those support levels. And we're going to be right at about 253 with that middle Bollinger Band next week. But we are on the verge of a bearish MACD cross. So we could get some nice bounce day trading opportunities in OGI, depending on what kind of reaction we get. Last SPRWF. So same pattern of lower highs and lower lows. We got a really tight range here. Clear bear break on a spike in bear volume, taking out supports. New support is down at 101, right above $1 psychological support. Also looking at 105, but the bears are clearly in control. We set some lower highs at 118 and 119. Those are now clear resistances. And pretty much the range to be watching is $1 psychological and 119 resistance. And the bears are still in control on the daily time frame. So to sum it all up, and the weekly time frame, sorry, here, SPRWF still in control, higher lows very clear, middle Bollinger Band support, but again, we're watching some bearish MACD crosses here, and if we lose the middle Bollinger Band on the weekly, that will be a red flag to the longer term bulls that the trend could be changing. So we'll be watching that very closely for both SPRWF and OGI. They are the closest to their weekly middle Bollinger Band supports. So the highlights of this video, APH and the break in the correlation from CGC with the strength we saw last week, and also the correlation, very, very similar ACB chart, and perhaps a glimpse into the future by looking at the MJNA chart. Very, very similar patterns at this point. You see those Bollinger Bands tighten, rejection from the Bollinger Band, reestablish higher low, and then a full-on breakout on big volume. So APH and ACB certainly have my attention, and OGI with weakness anticipated Tuesday. Hope you all have a great new year, and I will see you in 2017.